What's going on, everybody? Welcome back to another show. We got a lot of news to get into. So, without further ado, let's get started. Today, we got the Bitcoin price is at 17,041. Was up this morning at 17,300. Coming right back down. Been trading sideways for good maybe month and a half or something. Haven't really seen any action there, but nothing really going on. Still waiting for some big news, possible bankruptcies, insolvencies in the crypto industry. But I guess we'll just stay tuned, see if we're gonna have that capitulation or the bottom's in. Remember, 4-year cycle so far, longest bear market would get us to December 20th. So maybe the bottom's in. Maybe it's not. Got Hex hit above 3 cents today, but back down at 2.91 cents. Also, not a lot of action. It seems like forever since the last massive pump, since those days when we were, getting crypto and then automatically making money. Remember that? I think that was like 8 months ago, but it feels like forever ago. Every single crypto you bought just went up. Yeah, bear markets are brutal. Got just the broader markets right now. Refresh that. Pretty green day overall. Bitcoin is 5.6% up. Hex is up 14%. Is this refresh? Yeah. Uni's up 19.6%. Hex up 14%. Bitcoin's up 5%. Yeah, market's looking green, but yeah, short term doesn't really mean anything these days. What do we got on Hex daily stats? Refresh that. Hex daily stats. Check it daily. Wow. 121 new holders. 42 new stakers yesterday. That's big. Bear market numbers. 42 new stakers at 116,078 total current stakers. Will we hit? What will be the total amount of current stakers by the end of 2023? That's the question. Maybe 400,000 or 500,000. That would be awesome. But I don't know. Call me a dreamer. Moving on. We got Twitter at 0x Coast. I think they're working on a fiat on-ramp. Is my audio coming in? 0x Coast is working on the fiat on-ramp. They had a great tweet today. Hex is up 172x against Bitcoin, and Hex is down 95%. So being down 95%, it is still up 172x against Bitcoin. That is very, very big. That is very, very big, folks. What's going to happen once it's up, once it's not down anymore? What happens once we're at all-time highs? We 1,000x Bitcoin. We got from at KDP Crypto, could be nothing. Hashtag Richard Hart had 1,000 followers on Instagram in 2021. He now has 231,000 followers on Instagram. Wow. 1 year, 230,000 new followers. And people are still not trusting the plan. People still think that the outrage marketing is destructive, is bad. I don't know. The metrics say otherwise. And I know we're down because we're in the bear market, but nevertheless, the outrage marketing, I believe, is effective. What else do we have? We have John Cena. John Cena is now following Richard Hart. So Richard Hart tagged him. He said, "At John Cena, welcome to the party." So this is actually a little bit overrated, because if you look at John Cena, he's following 498.7 thousand people. So I don't know why he'd be following Richard. He certainly never said anything about Hex, but I guess it'll be interesting to find out. But yeah, John Cena. John Cena, we all know John Cena is now following Richard Hart. So that was some interesting news. Then what do we have? We have update on the Kim.com debacle with Richard Hart. So yesterday I reported that it was possible that Elon didn't want to be seen with Richard Hart. I thought that because Kim.com said, Elon said your fashion taste is terrible. He didn't want to be seen with you, not even on audio. So I thought that perhaps that was a possibility, that Elon actually told Kim.com to boot him, but it turns out that is not true. That is not true, because we have a screenshot of the tweet. Did Elon say that? And then Kim.com said, of course not. Kim.com said, of course not. So Kim.com, in fact, kicked Richard off of the spaces with Elon Musk. But I was thinking to myself, like, if you really think about it, from Kim.com's perspective, it really makes a lot of sense to throw Richard off. I know it sounds maybe a little bit controversial, but you got to think about it. Every time Richard Hart goes into these spaces, he unintentionally really takes over, because he is the smartest guy in the room. He is the most insightful, and these are crypto spaces. They're led by Mario Naufel. Rand Nooner's in there regularly, and BitBoy Crypto's in there. All these big names pop in, and very few people know more about crypto than Richard Hart. And he has insight into everything. Even when they talk about things aside from crypto, Richard really takes over. And it's not because Richard is arrogant. It's not because Richard is trying to push everyone to the side, but people generally want to ask what he has to say. They want to ask his opinions. So Kim.com is not as intelligent as Richard, not as insightful as Richard. People don't want to talk to him as much as they want to talk to Richard. I mean, people do not want to. Yeah, people don't ask his opinion. He's a crypto layman, seemingly. I mean, I don't know for sure, but I'm not sure he knows too much about crypto even. So with Elon Musk coming into the space, and it's Kim.com and Mario Naufel as the co-host, they probably figured, like, hey, we don't want, inevitably, if Richard's in the space, Musk will probably be talking a lot to Richard, and like Richard will suck up a lot of the attention. And Naufel, who's pretty much an NPC, I mean, nobody's really ever heard of him until these spaces started. And Kim.com, who's, he does have a legacy, but still, I guess they figured, like, we want all Elon to ourselves. But I think that's a compliment. I think that shows you the level, that shows you that they sort of, in some sort of way, see Richard Hart as threatening. So the fact that they wanted him out says a lot about Richard Hart. I think it says a lot of good things about Richard Hart. I don't think he was worried about him promoting Hex. That's never been an issue in these spaces. No one's ever complained about that. And no one's ever complained about, like, the 5,000-10,000, Hex skins that come in with Richard and that, like, follow Richard into these spaces because they want to hear what he has to say, giving them so much clout, so much attention. So I think really it's just, they're like, hey, we want to get all the clout to ourselves, which is perhaps not right. Obviously being a Hex skin, you don't like it, but I think that's essentially why he threw him out, because they had no problems before this. So that makes sense. I think that ultimately it just came down to Naufel and Kim.com wanting all the attention, wanting to network with Musk, not wanting to get pushed aside by the huge, personality and the charisma and the attention magnetism of Richard. That's what I'd say about that. But yeah, I still think that Richard should still be going on these spaces. They benefited him tremendously. While he may have benefited them, they benefited him. He's gotten a lot of new followers from, people in other crypto communities and from just Twitter in general. So I don't think it's a reason to stop, but that doesn't mean he shouldn't host his own Twitter spaces. I wish he hosted more of his own Twitter spaces as well. I wish he streamed more, but he's busy with greater things. So I guess that's why I'm here. You're stuck with me. You're stuck with me. Can't have Richard. You'll have to have the Furu. Anyways, moving on. We got Pulsechain news. We always love Pulsechain news. Last time I did a video with Pulsechain, engagement lit up like crazy. Just a testament to how much people want Pulsechain, and in my opinion, not financial advice, Pulsechain's price performance in the upcoming bull market, which will happen sooner or later, but hopefully sooner. So Walrus, you guys should be following at Walrus Official. He's a developer. He is a genius. I don't know if he's actively working on Pulsechain. I think he might be, but he knows a ton about code and everything like that. So great account to be following at Walrus Official. Anyways, nice to see some tangible updates on Pulsechain. Pulsechain testnet v3 update. Devs are working on a bug found in ETH 2.0, whose dev team is also aware and working on it. Still no date, but would be interesting if the Pulsechain devs fix it first. Wouldn't be the first time. That's interesting. Hey, let me retweet that. Yeah, see? Testament to the competency of the devs. I remember Eric Wall was questioning how good developers were because he said that since Richard Hart does the outrage marketing, the good developers aren't going to want to work for him, and he's going to have the bad developers. Stupid argument. More of that parade of imaginary horribles kind of thing. But I think the fact that Pulsechain devs were able to find bugs in ETH 2.0 and have fixed it before ETH devs have, and possibly will fix it this time, is a testament to Richard's judgment and the competency of the developers of Pulsechain. And then we got at KDP Crypto, Pulsechain devs found a bug in Binance Smart Chain consensus. Leader hacks for millions. Now the Pulsechain devs find a bug in ETH consensus. Pulsechain is going to destroy every chain when it comes to security and code. The crypto takeover is near. Hex equals winning. Yeah, I agree. I think Pulsechain is going to destroy every chain when it comes to code, when it comes to security and code, for sure. And people got to stop complaining that it's taking too long, because the most important thing is security. You're dealing with people's money. You want it to be done right. And frankly, the price performance has been terrible lately. We've been in an environment of horrible price performance, and likely, and people think that, oh yeah, Pulsechain launch is just going to save everyone and Hex is going to go to $2. I don't think that's true. I think cycles matter. I think the broader markets matter. I think that in order for us to really see all-time highs with Hex, there does need to be better market conditions, in my opinion. But that's just my opinion. What is your opinion? Let me know in the comment section. Got 19 watching. Thank you guys for tuning in. If you're enjoying, please hit the like and subscribe. Please hit the like and subscribe button. Would really appreciate it. And add your comments so I could see what you have to say. Wait, how come this? How do I put this back on here? There we go. There we go. Okay. Moving on. We got an article by RonanWritesCopy.com. Very good writer. Did an article on PulseX. PulseX. What is PulseX? What is PulseX? What is this PulseX thing everyone's talking about? Okay, for all those who don't know, and if you do know, then this is just a great refresher. So I figured, why not talk about it? PulseX is an awesome project. It's Uniswap just on a faster blockchain, with with better game theory, better community, in my opinion, and you know, in my opinion, not financial advice. So a new wave of blockchain technology is almost here, and it's Pulsechain. That's right. This new technology promises to revolutionize the way we interact and transact with each other, and has the potential to revolutionize the way we do business. Pulsechain is a decentralized peer-to-peer blockchain platform that enables users to safely and securely send encrypted data, payments, and digital assets without the need for a third party. It has been designed to be highly secure and efficient, and it is powered by a consensus-based algorithm, which makes it extremely resilient to hacking and tampering. These platforms, need some grammar check, are also designated to be extremely user-friendly, and it is built on a modular framework, which makes it very easy to integrate into existing systems and applications. This makes it easier for businesses to adopt Pulsechain technology without having to invest in costly new infrastructure. Yes. Yeah. In addition to its security and efficiency, Pulsechain also offers a suite of features that make it one of the most cutting-edge blockchain technologies on the market. It has built-in smart contracts, which enable businesses to automate a variety of tasks such as payment, asset management, supply chain tracking. It also has integrated identity management, which allows users to securely store and manage their personal data. It's, blockchain technology, basically, summarized. As a result of these features, Pulsechain will quickly become one of the most popular and widely used blockchain technologies. A number of major companies could adopt this network, including Apple and Google. This is just the beginning, though, and more and more companies and individuals turn to Pulsechain to take advantage of its many benefits. Apple and Google, that's a big statement. Do you guys think that Apple and Google are gonna adopt Pulsechain? Well, probably. Yeah, I hope so. PulseX is a decentralized cryptocurrency platform that is designed to revolutionize the way people invest in digital assets. This platform is built on the Pulsechain network, a blockchain operating on a proof-of-stake consensus mechanism, allowing users to securely stake, trade, and transfer digital assets. PulseX is designed to provide users with a secure, reliable, and efficient way to invest in digital assets. So true. So true. Yeah, basically a decentralized exchange. So the PulseX platform uses an automated market maker protocol designed to ensure that all transactions and data stored in the blockchain are secure and reliable. The consensus protocol is designed to ensure that all nodes in the network agree on the data they're processing and the transactions they are approving. This ensures that all data is accurate and that the transactions are securely stored and processed. The platform also has a built-in smart contract system that allows users to create and execute smart contracts without the need for a third party. This allows users to use the platform to create automated systems that can self-execute contracts without the need for human intervention. So it's like Pulsechain is a fork of Ethereum. So you just copy and paste the code, and like Pulse. This article is like a copy and paste of description of Ethereum a little bit. No, it's not necessarily directly copied, but you know what I mean. It's a great article though, and I'm sure he put a lot of time to doing it. So you guys should visit Ronan Wright's copy. So then we got the PulseX platform also uses a decentralized exchange that allows users to securely trade digital assets. The DEX is designed to be secure, reliable, and efficient, allowing users to easily trade digital assets without the need for a third party. I just said that. The PulseX platform is designed to be user-friendly and easy to use. The platform has a simple user interface that allows users to easily navigate the platform and manage digital assets. The platform also has an intuitive design that makes it easy to use, even for those with limited technical knowledge. Finally, the PulseX platform is designed to be cost-effective. The platform is designed with a low-cost model that allows users to invest in digital assets without paying high fees. This allows users to get the most out of their investment without having to pay exorbitant fees. Okay, great article. Please check that out. What's interesting though is he did not mention the tokenomics. He did not mention the burn and buyback. You know, using a percentage of the fees on PulseX, to buy back the PulseX token off the market and then essentially pump the price. I think that would be good. Maybe you just want it to be more professional kind of vibe. But yeah, the PulseX game theory is awesome. Does that mean it's going to do better than Pulsechain? Definitely not in the first 2 years, in my opinion. As much as I like PulseX, and I believe that you should do the 1/3 Hex, 1/3 Pulsechain, 1/3 PulseX. There are so many more people that got in on the PulseX sacrifice that didn't get in on the Pulsechain sacrifice. So I think those people are all going to want Pulsechain. They were just late to the party, and they're going to have to buy it from whoever got in on the Pulsechain sacrifice. So Pulsechain, in my opinion, is going to be the cryptocurrency of this bull market. I think it will be the number one cryptocurrency. I think this bull market is going to be the bull market of Pulsechain. That is what people are going to talk about. Hex is going to be Hex is going to do extremely well, but I think I think it's going to, in fact, I think it's going to outperform over 5, 10, 15 years. But this bull market, I think Pulsechain is going to do the best because it's new. Less people got in on it than PulseX, and it's a simple narrative, layer one as well. And a testament to that really is, as a content creator, when I put Pulsechain on my thumbnails and I talk about Pulsechain, I get probably 3-4 times the viewership that I get for Hex, or even that I get for Hex. PulseX also does very well, but Pulsechain, it gets more engagement on the content that I create. Same thing with like all these new projects that are actually building on Pulsechain. These new projects that are building on Pulsechain, they all want a piece of Pulsechain. They're all writing Pulsechain in their ticker or in the name of their project in order to raise more money. People see Pulse in the ticker, and they just sacrifice, or they buy the token, whatever it is. So I think the amount of money that these projects have raised and is a testament to how Pulsechain is going to perform. In my opinion, not financial advice. Does that mean that I believe that these tokens that are building on Pulsechain are going to do as well as Richard Hart's tokens? I don't think so. I don't think any of them will. And the chances of you and even if one or two do, the chances of you finding it are extremely low. But they are able to really piggyback off the narrative, off the merit and street credit of Pulsechain, and it has been very effective. So I think Pulsechain is king for now. Hex is king in the long run. PulseX, we'll see. Maybe PulseX does better than Pulsechain. You guys think PulseX will do better than Pulsechain in the near future and over the next 10, 15 years, 5, 10, 15 years? Which one does better? I mean, we'll see. As of now, PulseX game theory is better. It is better. But we'll see. I think it'll depend on a lot of things as well, like just projects being built on it and all those things. Moving on, we got Coinbase. Keep talking about same website, guys. Go to RonanWritesCopy.com. It's a great website, great news. Coinbase is all over. Coinbase, we keep on talking about, that next company to go down to really have Bitcoin reach that capitulation. People say it's inevitable. I say not necessarily. I wouldn't rely on it. That's why dollar cost average. But people say, I was saying yesterday, Genesis most likely, just because they're so behind the curve. They're actually scrambling to raise money, but that's not necessarily indicative of that. Coinbase is one of those companies that are potentially going to lead to another cascade. And Ronan Writes Copy explains why. So he says, Coinbase in trouble? The Coinbase crypto exchange is at risk of causing the worst crypto bear market seen yet. That is some strong words there. The worst crypto bear market seen yet. This is because Coinbase is unwilling to publish their reserve assets like almost all centralized exchanges have agreed to do. Coinbase's lack of transparency is leading to a growing sense of unease and mistrust among investors. Rightfully so. Coinbase's refusal to be transparent about its reserve assets means that investors have no way of knowing for sure how much of the crypto assets stored on the exchange is actually backed by real assets. This means that investors have no way of knowing if their funds are safe or not, or if their funds exist in general. This lack of trust is leading to a decrease in investors and trading on Coinbase, leading to a decrease in liquidity. This decrease in liquidity could lead to a crypto bear market if Coinbase were suddenly to collapse. Could lead to, are we not already in a crypto bear market? When was this written? Yeah, I think we're already there, but it could lead to a worse crypto bear market. Coinbase's refusal to be transparent is not only leading to a decrease in investor confidence, but also leading to a decrease in regulatory compliance. Regulators are becoming increasingly concerned about the lack of transparency at Coinbase, leading some to call for stricter regulations. This could ultimately lead to Coinbase being forced to close down if they are unable to comply with new regulations. That would be crazy. Wouldn't that just be force them to comply? Wouldn't they maybe force them to comply and then, if they're not actually solvent, then shut down? But yeah, the lack of trust and regulatory compliance at Coinbase is leading to a decrease in trading and liquidity, which is leading to a decrease in crypto markets. If Coinbase were to suddenly collapse, it would cause a crypto bear market unlike any we've seen before. Investors would be left with little to no recourse and would be unable to recoup their losses. It's clear that Coinbase's refusal to be transparent is leading to a decrease in... Keeps repeating these things. Yeah. Basically, Coinbase says the same thing a lot of times over and over again. Yeah, we'll read this. Recent development have made it clear that Coinbase is unwilling to publish their reserve assets, something that almost just like keeps on repeating. It is clear to see the ill intentions of Coinbase in their unwillingness to publish their reserve assets, and the potential effects of their collapse are alarming. If nothing is done to prevent this from happening, the crypto markets could be in for the worst bear market yet. Yeah, that would be bad, but honestly, bring it on, because we already had FTX and we're still standing. What is really the solution to these centralized exchanges? Like, just they're allowed to basically refuse to publish their balance sheet, to undergo audits and just expect it to be okay. So I think sooner or later they're gonna be facing an ultimatum. I think when the regulators die down, they're gonna have to either say they'll comply with an audit, and they'll be transparent, they'll show proof of reserves like Binance has, KuCoin has, they say, and other cryptocurrencies, and that will lead to either the worst crypto bear market, or maybe that will bring in the bull market. I don't know. Maybe they're kind of like filibustering to see if to really get things in order before they have to really open the hood for regulators. That could be the case. I don't know. Coinbase has been the one thing I'd say about Coinbase is that it has lasted multiple bear markets, and that really is a testament to the resolve of the company to an extent. Like FTX, Celsius, Voyager, all these like lending platforms and other centralized exchanges that shut down. This was their first rodeo, and this is not Coinbase's first rodeo. So I think that makes me a little bit more optimistic. They're also able to raise. Well, actually, they're not able to raise money as easily anymore because their bonds are selling at like maybe a 40% discount or something. So I don't know. Liquidity is drying up. There's no more easy money. Is Coinbase going to remain solvent? What do you guys think is going to bring in this next bull market, this next next leg down in the bear market? Is it going to be Coinbase? Is it going to be Genesis? Is it going to be Gemini? Is it going to be something else? KuCoin? Who knows? Most important thing is to have your, and obviously this is not new, everyone says this, but just take your funds off exchanges. It's like so funny seeing all these normie YouTubers saying, take your funds off exchanges, take your funds off exchanges. It's like, bro, Richard Hart's been saying that for years. Hashtag Richard Hart was right. Yeah, So that's really what I'd say about that. So I wanted to show like another thing. These people, these so-called like trading experts and things like that. You had the Moon Carl. So Kobe tweets, "It's a shame that at Bybit Official, that's the exchange that sponsors Carl Runfelt, is hosting another Moon Carl token launch after the performance of the last one, which he appears to have mostly abandoned." So then it shows Bybit coming soon to Bybit medieval Empire token. It's the utility token in Medieval Empires, a mid-core multiplayer online strategy game. Yeah, and then it shows it's pinned to the Moon Carl's Twitter. And then he shows them in a DM. I have a couple of startups right now in the pipeline. Costa was just the first one out. And then it shows Costa's price performance. Yeah, it ICO'd at like, it launched on Bybit at like $1, and now it's at like 3 cents. The VCs got in Costa. Costa is a good example why you need to do your research. You really need to look at the venture capital distribution. Venture capitalists basically get in on the project before the token launches. Happens with stocks too, but essentially with cryptos, it's very bad. They don't really care about the project that much. They get it for a huge discount. So Costa, I think, was 8 cents. VCs got it for 8 cents a token. Then they go public for $1 a token. And then what they do is they go to all these content creators like the Moon Carl, like BitBoy, like all these other ones. And they tell them, yeah, we'll pay you essentially, or we'll give you a lot of these tokens on condition that you tell your followers, your audience, you shill it to them. You tell them how well it's going to do. It's going to moon. It's going to be, I remember the Moon Carl, I used to watch him a lot. He said it was the next PayPal. And that basically, that gets like this heavy volume, this heavy trading volume, a lot of buys, a lot of liquidity, right? You know, they get liquidity, they get their audience's liquidity. And then it goes public, and then all these VCs and, you know, YouTubers, I don't know about Carl the Moon in particular, they just dump it on their audience. And it's not acceptable. It's not right. It's very unfair. There's not much transparency. I personally don't remember seeing the Moon Carl saying anything about VCs getting ahead of everyone like that. But that's really why you got to check the white paper. You got to look at the token distribution. When there's a company, it's usually a bug, not a feature, because they're going to be selling those tokens to fund their company, because they're not making any earnings. It's blockchain. It's early. It's not profitable. Sorry. I'm saying you're not, first of all, you have the security issue when it's a company, but even if it's not a security, or even if, let's say they pay the fine, whatever, they're in the regulatory clear, but they need to raise money. How are they going to do it? They're going to do it by selling their token. Costa is going to raise money selling their Costa token. Ripple raises money selling their XRP token. You look at I keep on going back to the tokens that made it through 2 bull markets. I think that really is the longer it's been around, like the more likely it is to stay around. So the ones that, you know, come to mind, like the top ones are Bitcoin, Ethereum, Cardano, Monero, BNB, and Doge. And the only one that has a company is BNB. So I think, that's a big metric that people misconstrue. They think that, you know, having a company behind you is good. It's not good. I mean, maybe you could say like in the long run, it's good. For example, like with growth stocks, they have no earnings and they're raising money on their shareholders, but it's sort of a promise that when we have earnings, when we're profitable, we're going to do stock buybacks and dividends, and, you know, we're going to pump your bags kind of thing, like that sort of thing. You could say maybe that it'll be advantageous in the long run, but I think we're far from seeing blockchain companies be profitable in the way that like Amazon and Google are profitable. And even if they are even when blockchain companies are profitable, the likelihood of the ones that we're seeing now making it is extremely, extremely low, just because most companies don't make it. Look at the .com bubble. Most companies didn't make it. So what was I saying? So getting back to the Moon Carl. Yeah. So, I mean, Zach XBT screenshotted him. So he said, in 2013, you missed Bitcoin, 2014 Doge, 2015 XRP, 2016 ETH, 2017 ADA, 2018 BNB, 2019 Link, 2020 DOT, 2021 SHIB. In 2022, don't miss Medieval Empire. Like, he's putting it on the same level. And And there's no conflict of interest there. I'm saying he's not getting paid sponsored by Bybit or, obviously he is. It's ridiculous and it's unacceptable. Regulators want to, crack down on something. They should crack down on these content creators shilling rugs. Not to say this is a rug in particular, but, it's just comes too often. So the Moon Carl responded with a picture. So he actually responded to that, which is interesting. But to the Moon Carl's defense, let's just read his response. He said, Kobe, I'm working hard with the team of at Costa app. I did not abandon the project. Next time, reach out to me before you say things publicly. Thanks. The app is live and has thousands of satisfied users, but the market affected everyone. DM me for more info. Okay, let's see. Let's see how Costa does in the long run. I personally don't think it's going to do so well, but that's not financial advice, and you got to do your own research about Costa. And just in general, like, content creators just have a bad track record. Like, I remember when Rand Nooner, he got in trouble for shilling a token, and he got caught selling it, like, on the screen that was showing up, like, showed his account selling it on an exchange or something. It's just, yeah, when these accounts that have like hundreds of thousands and millions of followers are telling you to buy a new project, from what I've seen, it generally does not end up working out well. And you just got to think of the conflict of interest. Like, these people, like, you really, I mean, like, you just have to have tons of people coming at you, throwing money at you as a big content creator to shill their token. You may not even know that it's a rug pull, but you want money. You want money. So that's really the story there. What's going on? Maddie's here. Thanks for tuning in, Maddie. Please smash the likes, y'all. Yes, please smash the likes. Agree 100%. Maddie, should I send you a link? All right, I send you a link if you want to jump on. I think that's tradition. I think I have to send links. No pressure, though. No pressure, though. I just wouldn't be doing my job if I didn't do that. Yeah. And then, like, another example, another funny thing I wanted to share with you guys with regard to these content creators. These content creators, oh my gosh, basically, taking money in order to shill tokens. You had, do I have it here? Yeah, this guy called out BitBoy Crypto. He showed a BitBoy Crypto mugshot. And then, whatever, there was a back and forth. And then basically said, unironically, I respect the mugshot BitBoy more than the current BitBoy that promotes rugs and dumps undisclosed scams on his followers for petty money. Also, a 2K like tweet. It's almost your most viral with 860,000 followers. Damn, this little account outperformed you many times. So then he said, it's been an hour. I'll give you $10,000 if you find and prove an undisclosed promo. They don't exist. He said they don't exist. We haven't even done a sponsored video since January, and we are never doing coin promotions again. You are living in the past, man, stuck in 2006. And then, where is it? Zach XPT response. BitBoy claims they do not do undisclosed promotions, spent a few minutes looking, and immediately found an example. Wow. This was 11/30/21. And then BitBoy basically responded, Zach, where's the response? Maybe he deleted it, but BitBoy basically said, since Zach found it and not this other guy, he doesn't get the $10,000. And then BitBoy basically blamed Justin and DZ. Made a mistake here. Yeah. Also, be very clear, I told Grinding Poet that if he found it, I would pay him $10,000. He did not find it. Zach did. This was not the deal. This guy doesn't get paid for Zach's work. Oh my gosh. Oh my gosh. Yeah. Yeah. Not good. But yeah, I guess you got to give BitBoy a little crypto for BitBoy Crypto a little bit of credit for admitting that he did do it. But then he blamed his team, so that's not cool. But yeah, just goes to show you again, these content creators, these big names, these big YouTubers that talk about cryptocurrency and those kinds of things, they're you being in crypto, you make your money through price appreciation of the cryptocurrencies. They don't necessarily, I mean, they maybe do, but another way they make money is by shilling garbage to you, or getting paid to promote tokens that they may or may not even care about. So their interest is not necessarily your interest. Okay. Last thing I wanted to show was Tim Draper predicts Bitcoin will reach 250,000 next year despite FTX collapse. This dam is about to break. That's crazy. $250,000 Bitcoin 2023. What do you guys think? Do you guys think Bitcoin is going to reach $250,000 in 2023? I don't think so. I do not think so. But let me know what you guys think. Do you guys think we're going to have $250,000 Bitcoin 2023? Maybe 2033 we'll have 250,000 Bitcoin. All right. I guess that's it for the news. Let's go to, actually, I have questions from the YouTube comment section. I wanted to share with you guys because it could be applicable to not just this person who commented, but it could be applicable to a lot of people that are just getting into the space. So I figured, why not answer it on the air? So just a reminder, you too can have your comments read during a live stream, just if it's good enough, or you comment during the live stream, I get to all the comments. But point is, so first one is, I didn't know Pulse, so I'm not sacrificed for Pulsechain PulseX. What is the plan? Buy Hex before launch. So he has A and B. A is buy Hex before launch and swap Hex for Pulsechain PulseX and stake. In staking. B, nobody knows after launch Hex price go down, so just wait and buy USDC and swap Pulsechain PulseX, which is better. First of all, I'm not a financial advisor, so I can't give you financial advice. But I could tell you maybe the way I see it, So first of all, buy Hex before launch and swap for Pulsechain PulseX. I don't know what it means, and staking. You either, I guess staking the PulseX, whatever. So buy Hex before launch and swap for Pulsechain PulseX. I am actually one of the few people that is a little bit reluctant on that, because if you buy Hex before the launch and leave it liquid for Pulsechain PulseX, you are subject to the volatility of the market. Meaning if the price of Hex drops 50%, which is very possible, I wouldn't say likely, but there is a chance that Hex could go down more, especially if Bitcoin goes down to 11K, then you lost half of your buying power to buy Pulsechain and PulseX. There is also the chance, obviously, that Hex could double, and now you have double the spending power, and you could buy double the Pulsechain and PulseX you would have bought had you not waited in liquid Hex. So for that reason, I say it's important to have exposure to stable coins, because stable coins, provided they keep their peg, they maintain their purchasing power, right? They're not subject to 50% corrections and doubles, because they're $1. They're just tied to $1. So I recommend holding stable coins in your MetaMask, and then you get a free copy, which will be tradable for something. May not be as much as Hex, but point is you'll keep your buying power. So I think it's important to have stable coins, and maybe also have some liquid Hex. Maybe DC into some liquid Hex, and then when Pulsechain launches, you could swap that liquid Hex for Pulsechain PulseX and those stable coins. So I think you want to have exposure to both. You don't want to be completely in liquid Hex, maybe 50-50. I don't know. See what risk you're willing to take, how you think the markets are going to go over the next couple months, and decide accordingly. But then he's saying here on B, I say no. B, nobody knows after launch, just wait and buy USDC. I don't like waiting for dips, because the dip isn't a given, meaning Pulsechain launches, Pulsechain launches at a certain price, whatever, or Hex launches at a certain price. You know, people that are waiting for a dip, a lot of times it goes up and it keeps going up, especially in crypto, and you don't get that dip. Granted, eventually it will dip, but is the dip going to go as low as, you know, the price you could have bought it originally? I don't know. Often it doesn't. Often people that wait for dips get left behind. You know, when Bitcoin was at 3,400 in that COVID dip, I'm sure there were people waiting for $2,000 Bitcoin with their buy orders. Never got filled. They're likely going to get left behind. But and Ethereum, same thing. So I just don't like the idea of waiting for dips. You have to decide, in my opinion, not financial advice, which cryptos first of all, do you believe crypto is going to come back? If you do you believe, which cryptos do you believe are going to make it? Because chances are you don't believe that every crypto is going to make it, because most haven't made it, you know? So like, if you believe in Pulsechain and PulseX and Hex, then you just have to dollar cost average. I mean, you know, trying to find the exact time to get in, get out, I think is picking up pennies in front of freight trains. There's always there's huge risk of getting left behind. I think just spreading out your buys and having the discipline to allow time to pass, you know, in between purchases, I think that's the best way to go. You know, if you're DCAing in an asset that goes up over time, like Bitcoin and Ethereum, and in my opinion, Hex, not financial advice, you're good to go. You will do well over that period of time. That's how I see it, in my opinion, not financial advice. Do your own research. Second question, there are many Pulse projects. Example he gives here is Pulsefinity. How do you think, is it have to invest with risk, or just buying Pulsechain PulseX? So yeah, so this is something that really bothers me, is that there are so many, you know, nothing personal to people that are creating these projects. I'm not trying to allege they're scammers or not. I'm sure a lot of them are, and I'm sure a lot of them aren't. But right now, Hex is down 95%, right? Pulsechain has not launched yet. That's a new project. New projects do extremely, extremely well. Hex is still a new project. PulseX is a new project, hasn't launched yet. So if you sacrifice for these other projects, that is, or you buy these other projects. Many of these projects aren't even like exclusive to Pulsechain. Like, they're just ERC20s copied over to Pulsechain, and they put like Pulse in them. I'm not saying this one in particular, but the point is, whatever it is, with that money that you have, right? With that money that you have, that you could have been buying Hex down 95%, or you could have been buying Pulsechain. You could have waited for Pulsechain and bought Pulsechain when it launches. Or you could have waited for PulseX to launch, you know, waited for Pulsechain launch and bought PulseX. You are buying these projects. So the question you have to ask yourself is, do you think that these projects are going to outperform the Richard Hart projects? And I think that Richard Hart ecosystem is a huge opportunity, in my opinion, the way I see it. But if, and your money's scarce, it can only go a certain, you know, I'm saying, like, if it considerably underperforms or is a scam, I mean, I think, in my opinion, you're missing out on a huge, huge opportunity. So I think there is, I think a lot of these projects that, you know, piggyback on the Richard Hart legacy, and they just, you know, copy, they basically put Pulse on their ticker. You know, they add Pulse and it helps them raise money and things like that. I think they're taking away a big opportunity from new people coming into the ecosystem, because like someone like yourself is considering buying it. I mean, so I don't really like it. I'm not trying to allege them being scams, although many of them are scams. I just think risk reward, I think the best decision is to just go with Hex Pulsechain PulseX. In my opinion, that's not financial advice, but I think a lot of yeah, I think if you're, a lot of people are saying, oh yeah, but you know, Pulsechain can't be a ghost chain. You know, we need those smart contracts on Pulsechain in order for it to work. I don't. First of all, certainly in the first cycle, you don't. I mean, just look at all the projects that are on that. Look at Ethereum when it launched, how well it performed, how many projects were on it? Zero. Cardano has done well over 2 cycles, has barely any, if any, projects, and only had projects, you know, starting a year ago. So first cycle, it's certainly not necessary to have smart contracts. I think people that are creating tokens on it are, either they should be either they believe that it's going to outperform Pulsechain, and if they believe that, then it's fine, or they're taking away the opportunity from people to get in on what I see as a major opportunity. So I think Pulsechain does need development, but I think this bull market, I think the best way to achieve adoption would be through good price performance. And I think if you wait a cycle to develop on Pulsechain, or you wait 2 cycles, right, when Pulsechain's returns diminish as it matures as an asset, then you could give. If you're a developer, you're creating a token on Pulsechain, you could actually there's a chance of you giving your community the best opportunity on the market, chance of outperforming the market if your project does well, which it probably won't, but I'm saying if it does do well, there's a good possibility if you have a good project that you could give your investors the opportunity to outperform the majority of the broader crypto market. But given that Pulsechain's new and your community could either buy Pulsechain or your project, you're probably taking away their opportunity. I don't know if there's really another way to say it. I mean, but I don't know. You could ask I'm sure a lot of, I said this in one of my videos, a lot of these projects, they have AMAs in the Telegram, and you could ask the founder, do you believe that your project is going to outperform Pulsechain, and why? And if they could give you a good reason, if you do your research and there's a good reason for it, and then maybe you should look into it. But another thing that I've seen is that a lot of these projects have anonymous founders, and yeah, that's a huge red flag. That's a huge red flag. They are if nobody knows who they are, then what's really stopping them from pulling the rug? Why should they work hard to develop? Like, why should they care about the price? I'm saying, if they just pull the rug and run away, then is there going to be regulatory repercussions? Are they going to go to jail? Or are they going to be I mean, I don't think so. They're not really taking any risks, so I don't see any reason for them to. There's no reputational damage. They could just move on to the next rug pull and go to the next community and create this token that they make a promise in a white paper for, and just rug pull them. I'm saying there has to be accountability, and anonymity really takes away accountability. So certainly, in my opinion, not financial advice. If you see a project that has the Pulse prefix, and is hyping up their token, be sure to check if there's an anonymous founder. That's a real red flag. But everything else, do your own research. And yeah, personally, I think that given the situation, given the opportunity, it's just best to stick with the trifecta with Hex, Pulsechain, and PulseX. But everyone has to make their own individual decision. This is not financial advice. You have to look at the metrics, you have to look at the project and see if it's best for yourself. That's really what I'd say about that. Hope that makes sense. And I hope you're tuning in, and I appreciate the question. And we got 26 watching right now. Going to go to your comments now in the comment section, but please, before I do, please hit that like button if you're enjoying. Please hit that subscribe button. And actually, I just created a donation wallet. So if you, I'm not monetized on YouTube, but if you would want to send me money, just go to the link in the description below. And it's an Ethereum wallet. So you could send ETH, you could send Hex, USDC, USDT, any ERC20. Yeah, feel free to donate if you're enjoying the show. But if you don't want to donate, another thing I'd ask is just put your email. There's a link in the description below. Just put your name, put your email in the email list. It's completely confidential. It's not on a Google spreadsheet. End-to-end encryption. Everything's private. It's just so I could stay in touch with you, because it is not my platform. YouTube is not my platform, and not your platform, not your audience. So if you could just click that tiny URL in the description, just put your email in, that'll be awesome. But if you can't donate, can't put your email in, just I appreciate you tuning in today. I always appreciate when you guys tune in. And give me your time to spend with me, talking Hex. Let's get into it. Academiciated, kind of like our current APY, too many stakers, and we'll need that token value to ramp up and stay up. What were you referring to? I'm not sure, but too many. Yeah, we need that. We definitely need Hex to ramp up and stay up. Ted Cash. Thank you, Ted Cash. Thank you for checking me out on RH Max, Ted Cash, by the way. I appreciate you. Been a regular. We appreciate Ted Cash. Is there a way to make you a mod? I don't know how to make a mod through this. Does the star make you a mod? I hope. Okay, whatever. I don't know. Hello, Furu Finance. I'm looking for an elevator pitch to introduce people I meet to Hex. Do you care to share what you say? So this is an interesting question. I was actually thinking maybe of like an onboarding script. This comes down to sales. Sales is something that I like to think I would be good at, but I don't have that much experience in it. First thing you have to understand is like who you're talking to. Like the way you talk to one person is not necessarily the way you talk to another. And the person has to really be interested. That's why I really think the best people to onboard in Hex are people from other cryptocurrency communities, because they already understand crypto, they already understand blockchain. But yeah, and if they're really not interested, don't really try and think that you could just convince them, through your sales method or whatever, or you could be persistent. If they don't want to, then don't, keep trying. Just find someone else or whatever, because if you end up getting them to reluctantly buy into it and the price doesn't do well, then there's going to be resentment because they didn't really want to get into it. They weren't aware of the repercussions. And now the price is down. There's going to be a lot of resentment. It could really ruin your relationship with that person. So I'd say you got to really, the best people to really onboard are people that come to you and ask you about it, like they're already interested. And let them know, you have to be honest. You have to make them aware of the fact that crypto drops 90-95%, because if they don't know that and they just think it's going to go up forever, again, that'll lead to resentment. So let them know of the risks and let them know of the benefits. Let them know the previous price performance. Tell them about, the APY that you could earn on it. Tell them how like cryptocurrencies like Bitcoin go up in price and, there's no yield, and there is yield, but it goes to people like the miners that dump on you. I mean, you could tell them all about it. It's different for everyone. But certainly it's got to be comprehensive. You have to be honest. You have to, let them know what they're getting in on, that they should. Oh, Maddie Allen is here. Hi, Maddie. Do I need my
Hey, I didn't know if I was going to jump on, but I really am enjoying your stream, so I figured I'd hop on for a second.
Hi. Thanks for tuning in.
Are we live?
Coming on. We are live. We are live.
All right.
Oh, wow. Special guest here. How are you? How are you feeling, by the way? That's really
I'm recovering. I am 4 weeks into my 6-week recovery from a car accident where I broke both of my clavicles.
Yes. So I remember you were only able to lift 1 pound. So how many pounds are you lifting now?
1.5 with each arm.
Wow.
It's a very, very, you have to let the bone, so the bone marrow actually has to like drip out of the broken bone onto the other part of the broken bone, and then it eventually fuses after 6 weeks. So.
Oh, wow. But this is a better alternative to surgery, right?
Yes, I don't have to worry about surgery going wrong or something. So
that's great. I mean,
yeah.
It's great that you're not getting surgery.
It's great that I didn't have any brain damage from such a crazy car accident that I was a passenger in. So yeah. And now, but it's also, it's like having a near-death experience also makes you realize what's important in life. And, I think a lot of people have seen, even though the SEC is persecuting me for no good reason, and even though I was in a near-death car accident, like I'm streaming more than I have been in the past, like more than ever. And I'm 100, this is my 105th or 106th week streaming every Tuesday and Thursday night.
Wow. Keeping consistency is where it's at. And yes, that is resiliency, and that is toughness. People think like a tough person is like someone who works out at the gym and, if you bump into them, they'll come. No, it's like
If you bump into them, then they'll onboard you into Hex.
Yeah,
right?
yeah, exactly. No, it's in the mind. It's in the mind, and nobody knows more about the mind than Maddie. So
thanks.
We appreciate it. And I guess I was looking at the chats, but the one of the big things I talked about, if I could get your opinion, if you don't want to comment on it, that's okay too. But you know the Kim.com situation where Richard was in the chat with Elon and Kim.com booted him.
Yeah, Richard really handled that like a boss, didn't he?
Yeah.
I mean, and he's just so consistent, which you just don't see from people in his position. They don't give so much transparency. They haven't spent hundreds of hours answering questions on YouTube. I mean, you can go to a website called hexsearch.io and you can pull up, you can search everything Richard has ever said on his YouTube channel with perfect language recognition. So you could type in Maddie all in and it would pull up every time Richard has mentioned me or like the Hex conference or anything that I'm involved in, which you would think that would be really hard for anyway. Like I'm impressed with the AI that it can pick up on such a strange name as my own.
Yeah, for sure. But I guess so the way I saw it is like I kind of understand where Kim and Mario are coming from in the sense that they figured, I think like you got to think, why are they booting Richard? Because Richard has really benefited their spaces tremendously, because every single space that he goes into, he brings 3,000 to 6,000, 9,000 people with him, right? I mean, it really puts them on the map. It's gotten a lot of people following them. I wouldn't have followed Mario Nalfo if not for Richard. I wouldn't have followed Kim.com. I'm sure I'm not the exception. But the point is, when Richard comes on, he is the smartest guy in the room. He knows more about crypto than pretty much everyone. And he's also very well-rounded. So even when the topics aren't crypto, it's not because of his, because he intentionally takes over, but generally people want to ask what he has to say. People want to interact with him. So I figured that Kim.com sort of thought that this is his chance to really interact with Elon, and maybe he was a little bit threatened and he was a little bit worried that Elon would want to talk to Richard more.
Yeah.
What do you think about that?
Yeah. Oh, definitely. Yeah. Richard is I think that's exactly what Kim was thinking. He had an agenda of like, trying to free his friends, and that's, that's understandable too. I think that, Richard is the organically most popular person in crypto on Twitter. I don't know I've ever, like, our conversation right now is making me realize that, it's like, It wasn't always that way. There were other people that were more popular than Richard, but Richard keeps hitting home runs with all of the analysis and, transparency and freedom that he creates, financial freedom, freedom of thought and ideas and stuff. So yeah, it really didn't bum me out that much once I sat back and thought about it, because it's like, Richard will definitely get his day with Elon.
Yeah. He does. You could tell he's one of those people that when people underestimate him or people, slight him, he wants to show them that he wants to show them that they were wrong and that they should have respected him.
Kim wanted something from Elon. Mario wanted something from Elon. Richard didn't want anything from Elon.
What did they want?
Clout.
Yeah, it's true.
Kim wanted Elon to post a poll asking whether Julian Assange and Edward Snowden should be let back into the U.S.
Mm-hmm. Oh, he did do that, actually.
Yeah. That was that may have been his whole motivation for participating in Twitter Spaces from the beginning. He may have been planning this for weeks to get Elon into a space to ask him that question. And so, like people have their own political beliefs that I don't really get into, but when it comes to like, financial sovereignty and like, doing the right thing and everything, I'll stand up for those things for sure.
Fair enough. I guess so. The question I had was, so Richard was saying after that happened, like, should get our own space, shouldn't have to suck middleman D. The way he put it. Do you think that he should continue to go into these spaces? What do you think?
I think he'll have a good sense of that, like from moment to moment. If you're asking like, what do I predict? I mean, you heard the 2-hour Richard Hart spaces that was like in the middle of the night after the Elon spaces.
Yeah. I heard it the next day, but yeah.
So I thought it was interesting that like 2 or 3 people were asking, were basically like pleading with Richard, like, please, like, do more spaces, blah, blah, blah. And, you know, that's a really fine line to ask a founder to do work for you because he doesn't work for us.
That's true.
But at the same time, it's like, who's your favorite sports player?
I haven't been following sports, but I like Curry.
Okay. So if, you know, for me, if it's Michael Jordan or something, it's like, you know, like as a fan of Michael Jordan, I will always ask Michael Jordan to play basketball. You know, it's a no brainer. And so just as long as kind of like experts in the space, I would say if we are always checking our own thinking about what is the difference between something where it's more of a security versus like meets 0% of security regulations, which is really only in the US. But you know, that's kind of, I don't want to say it's a spectrum, but it's you know, there are lots and lots of things that makes Hex not a security. And I can't think of anything that makes it a security. And there's a reason why things are the way they are, with the community being organic, decentralized. I run the Hex conference. I ask Richard if he will join. He can say no. He's not paying me. I'm not paying him. You know, it's like, it's all like, when it comes to the community, it's beneficial for the community to be organic, decentralized, et cetera, et cetera. And so somehow as a community, we have to balance our need for like fandom of Richard, but also then like to have our own leadership.
Fair enough. Yes. Yeah. I mean, that would not having to always ask him to do stuff is definitely brings it more on the side of not being a security. But I guess in terms of for his popularity as a self-help guru, as somebody who wants to change the world, I would say what I said is I still think he should be going on the spaces, because I've never seen him get so many followers on Twitter in such a short period of time as when he started going on these spaces. And not necessarily for talkingwithkim.com or Nowful, but there are always these huge names in there that have never heard of Richard, and then their fans kind of get exposure to him and things like that. So I think it would be a shame, in my opinion, if he would stop. I think it was. What do you think?
And for new people, you know, if we can just keep educating them to say like, hey, like, we want to hear about Richard's values. We want to hear about Richard's takes on things that are going on in society that are related to freedom of speech, to finance, to, you know, Bitcoin and Ethereum, to everything. I think that Richard will continue to evolve as a public figure, even not related to shilling Hex, and that'll add a lot of credibility. But it's very important when people are trying to learn something new, like what is real DeFi. And when I found like the best primer on cryptocurrency that I've ever found in my life, better than Andreas Antonopoulos, and it's an entire magazine episode was it new? It was one of the major like financial publications, and it's written by Matt Levine, who's like arguably like the best finance writer alive today. Mm-hmm. And Matt Levine is one of only 2 writers that has ever been allowed in the publication's history, going back to like 1930 or 1940, the second person ever to be able to write an entire magazine episode, like an entire publication. He got to write all the articles, and it was in an entire crypto it was an entire crypto episode basically. And it was a Bloomberg, basically. It was a Bloomberg publication. And so he wrote the best primer, and it's to where somebody who doesn't know anything about crypto could become could know almost as much as I do about like crypto, other than Hex, other than Richard Hart products. And what I realized is that like even the word DeFi has been corrupted so far. Even the term staking has been corrupted so far that like even people who are experts in crypto don't know what the hell Hex is. They don't have the language to understand it. And so when the words that we even use to describe how Hex is different than everything else, when those have become corrupted, that's a real situation where people are really going to have a hard time understanding that Hex is not a business. It's not a company. Nobody's in charge of it. There are no admin keys, right? Because no coiners aren't going to understand what those things mean. And so it's probably not enough to say that Hex is not DeFi, and it's probably not enough to say like, you know, that that this whole thing needs to be thought of a lot differently than just like a cult of Richard. And I think Richard I think he's acting in a way that supports the community, like you and I and like many others, like stepping up to the plate and being the ones who get the information out there, because we're the enthusiasts, because we're the volunteers. And so I guess the point I'm trying to make is that like, if people are buying Hex with the expectation that Richard is going to pump their bags, that's not as pure of a thing. And that's really not the point of Hex. The point of Hex is that people can become so educated that they can verify for themselves without needing Richard to be the one who tells them that this is the thing that could be right for them, right? It's Hex is more than just like a payment method. It's really not designed to be a payment method. It's designed to be a store of value that and the value is stored in Hex terms. It's denominated in Hex. And so that's why when even somebody takes the approach like, well, Hex has a value, like that's an interesting, complicated topic of like, yeah, Hex does have a value, but the only way to get more Hex is to time lock it.
Yeah.
You can't pay anybody who's centralized to like buy Hex, you know, like you can buy Hex from a decentralized exchange, but even that is something that most people don't understand how it works. They don't appreciate like the brilliance of it and everything. And so I think if enough people get together and you know, get the word out about why Hex is different and start to understand it and understand crypto how it was meant to be, that it'll that it could be that this next cycle we see something that we've never seen before in crypto history, which is more of Hex making records that have never been made before.
Yeah, and maybe you think that's why Richard has not really been streaming on YouTube. I was thinking, because that was one of the things. Yeah, because the foundation was built. I remember I used to watch all his earlier streams. There was just so much information, and now, you know, it's kind of it's kind of taken on a life of its own. You know, the information, and it's been, you know, the principles are being just spoken through like so many people. It's not even necessary for him to, actively be engaged. And for sure, there's definitely no expectations of profit from what he does.
So and what I would like to see in the space, even more than Richard like doing what people want him to do, because he'll always do what he wants to do, and that's, I think,
yeah,
I'm confident that'll be what's right for him, and that'll be probably something that's really cool and that people can respect. What I would like to see is like people like you get to where I'm at twice as fast as it took me, and it's like, I would like me to get to where BitBoy is twice as fast as it took him. And, people who are really in it for the right reasons and who have the foundation to not be corrupted, I would like to see that go well. And that's why I came on. That's why I appreciate people like you who are showing such interest and putting in the hours and learning everything. Like, I think that if we work together in a way that's never been done before, that'll be really cool as a decentralized community.
Oh yeah. Hex really does have that decentralized community sort of thing. And you were saying also earlier about like just, I think a lot of what you're going through in terms of like, the SEC and, people thinking Hex is a scam, and they sort of think that the same. You said that like staking it's really lost its meaning, because like now staking is you just give your money to a third party and hope they pay you back and then some. And obviously Hex is trustless and things like that. Like all these things are just new things. And when there's a new technology that comes into the world that is really paradigmatic shifting, people are suspicious. And in very many ways, it's rightfully so, because in most cases, when somebody would be saying you could get 38%, I guess it's not, you could get 38% more of your crypto. I don't know if the language I'm supposed to use, but if you stake 100 Hex, you're going to get 138. You're going to earn 38% on your crypto every year. Your tennis should go up. But if you really understand blockchain, I'm sorry, what were you going to say? Don't hold that.
So staking in Hex, which is different than other staking, is it's not as good of a deal as it sounds like it at first, because the 38% is something you only get if only 10% of the coins are locked, which seems like that could continue in the same ballpark for years to come. I hope that it doesn't. I hope that it goes down, but that's a side topic. But so there are a number of assumptions. One is that 10% of the coins are locked, and you're time locked for the average length as everybody else. And there's some mathematical proofs that have to do with the average stake length of everybody, not like the number of people, but like the number of coins that everybody has staked. Right now, the average is about 6.5 years. And that's Nobel Prize worthy. That's never happened before. Nobody can explain, if they really know, why that would be, other than Hex is really well designed. And so, because like most people assume, if they're looking at Hex at the surface level, that if people time locked so many coins, that the coins were like worthless when they time locked them. And that's not the case. And like, so you still have like for me, I could be time locking thousands of dollars worth of Hex and like living super cheap right now, and it's like, that's real. That's something that you don't see in other cryptocurrencies, even now, even copycats, anything. But to get back to the 38%, like if you want 38% APY, you're not going to get your coins back, and you're not going to get the APY until 6.5 years in. That's when you get the 38% per year. If you only want to lock 1 year, you're only going to get about 10 or 12%. So last night, I watched a documentary on YouTube about Charles Ponzi. Have you heard of him?
Yeah, I mean, I don't know much about him, but he did coin the Ponzi scheme, or it was coined after him, I guess.
Do you want me to tell you a little bit about the what I took away from that?
Yeah, absolutely.
So Ponzi, real interesting character, but the thing that he stumbled upon that seemed to be so profitable was after World War I. So this was he executed his scheme, his fraud. He executed it at the very beginning of the Roaring 20s, and so this was right after World War I ended, and there was this arbitrage that could take place between stamps. There was an international stamp system that had emerged, but some of the currencies had been destroyed because of the World War. And so Ponzi realized that that he could sell people this idea that they were that there was some legitimate money-making scheme, but the way he advertised it was that you could at first he said you could get 50% interest in 45 days. And then a couple weeks later, it like started to work so well. Then he said you could double your money in 90 days. And the length of the fraud that he perpetrated, it only lasted about 8 months before it collapsed. But he was living the high, like he was balling out. He was balling out. He was in Boston. He had gone from being super poor to like, being able to have a $200,000 like equivalent car today. And so but at the spoiler alert or whatever, Charles Ponzi only ever bought $3 worth of stamps. He only bought $3 worth, and he was so effective that they like at just like promising people and giving them notes that like he would double their money. And what's interesting from a human behavior perspective is like, even though he was promising to pay 400% APY, because if you double people's money 4 times a year, every 90 days, that's 400% APY. He was promising that. People would line up. He had like a physical system. So people would line up like all the way down the street, like huge street fulls of people just lining up. And they would take their note in after 90 days and be like, are you really going to pay this? And then he'd be like, yeah, here's your money. And he would take the new people's money and just give it to the old people. And then the old people would turn around and they would just be like, all right, here's like all what you gave me plus more, right? Because that's how people are. That's just how people are. And so in a Ponzi scheme, like what you're doing is you're the old name of it before it got named after Ponzi was robbing Peter to pay Paul. So before 1920, that's what it was called. Robbing Peter to pay Paul. And basically in that type of a system, like you're like promising something that you can't deliver on. Like, first of all, he lied about the postage because it would never work at the scale that he was doing. Like there were not enough postage stamps in the world to support the amount of money that he brought in. And then second of all, that amount of APY, just like it's impossible to pay from something that you're not creating yourself. Like if he had created Ponzi coin and he was able to issue Ponzi coin, now that would still be a security because he would have to register it as an investment because he would be promising to like do this stamp business. Right. And so like that would be like common pool and work of other, dependent upon the work of others and all these like criteria that got set based on, all right, here, this is good. Ponzi's company that he named was called the Securities and Exchange Company.
And
it's before the Securities and Exchange Commission existed. So they like stole the name of his company. Seriously, this is like this
is interesting.
But so the fact that Hex pays, supposedly, the fact that people choose to say that Hex pays 38% APY is kind of misleading in the way that like, yeah, if you time lock your money for 6.5 years, who's going to do that? Only people who are super long-term minded. Second of all, like, so the interest isn't paid every 90 days. The interest is paid at the end of the lock, which also the interest is not paid in US dollars. So there's no representation of what your Hex is going to be worth in the future. In fact, like, that's like one of the best rabbit holes to go down, is like, it's completely just based on whether other people like sending money to their future selves, like whenever your money comes out, and like, that's unknown. So the fact that Hex is a decentralized smart contract that like isn't controlled by anybody, and like just has these rules built in that basically it inflates to pay the people who are holding up the price, and the people who are paying the inflation, the people who are getting diluted by the quote unquote 38% APY, but really it's only 10% APY if people are only locking for a year. And it's, you know, like, you're being diluted if you're not locking. Like, there's, both sides are winning on that, because like the people who are holding liquid, they want to sell if the price goes up. So they're getting something out of it. They're getting a more scarce token that they own by paying the inflation. The people who are earning the inflation, who are earning the yield, they are sacrificing something, which is the ability to sell. And they're earning something, which is more Hex tokens. And so it's Hex is like, absolutely, without a doubt, like, with, you know, any definition you can think of, is not it's not a Ponzi, because it's not robbing Peter to pay Paul, because it can always deliver more Hex tokens, because Hex tokens are inflated just like Bitcoin are inflated to pay for some behavior. In Bitcoin, the behavior is stopping double spends using supercomputers. In Hex, the behavior is time locking, giving up your right to sell so that other people can have more scarce coins. And so it's yeah, I mean, and then a pyramid is just something where new people, a pyramid can be hard to explain to some people who really don't understand, who have never like been into a pyramid scheme. It's like hard because people would say like any hierarchy is a pyramid scheme or something. But that's not true. Like, you know, just because one person saves more than somebody else, that doesn't mean it's a pyramid scheme. Just because, you know, somebody collects more cars, that doesn't mean that like now they are at the top of the pyramid or something. It's like a pyramid scheme is like, basically you could have like goods and services in there. And then, but if you just have money, it's like a naked pyramid scheme. And it just means like you have to pay people in your downline or pay people in your upline. And Hex isn't anything like that, because there's no levels. And how some people could confuse that is they see people like promoting Hex, like having a lot of T-shares, and then they learn about the staker app metaphor of like staker leagues, and then they think like, oh, well, that's the pyramid, because there's only so many whales, and there's only so many sharks, and there's only so many dolphins. But again, that's just a system of saying like, well, Jay Leno and Elon Musk like have the most cars, so cars are a Ponzi scheme. Well, no, cars are not a Ponzi scheme. Like, cars are just something that we can count. Just like delayed gratification and T-shares are something that we can count, but people had to do real work and had to compete with each other to do that. And look, I was there when I was there not buying Hex at 1 Satoshi, because I had already bought it at, you know, 10 or 20 Satoshis. And then I had to force myself to buy Hex at 4 Satoshis or whatever it was. You know, like, I'm just giving random numbers here, but the point is, like, just like people bought Hex at 50 cents and then they're, you know, then they're forcing themselves to buy it at 2 or 3 cents, or they're just waiting until it gets to 5 cents, or waiting until it gets to 10 cents or something, or they're just happy with what they have. Either way is like, I know I'm rambling a lot, but I hope this is helpful.
No, it's very helpful. And it's the key is that it's trustless. It's just people interacting with the contract. And it's sort of, I mean, we're 3 years tested now, but seemingly foolproof in the way that it's a system where everyone benefits without relying on a third party, without any middlemen. And it's really something that has never been possible until the creation of blockchain technology. So it really comes back to the point I was saying, is that whenever there's something new brought into the world, something innovative, something that could benefit people and improve their lives, it's not understood. Especially technology. People don't understand it, and it gets a bad name. And the same thing happened with the telephone. I think it was John McAfee talked about it. Like, people thought it was just for criminals, it was for mobsters. Cars were for bank robbers, the automobile. And then you had then you had more recently Bitcoin. It was just, everyone's like, internet money, obviously a scam. And it was just something misunderstood. And I think Hex is the same. The case, Hex is not the exception. Hex is the rule, that it is a new technology that is just misunderstood by the rest of the world. But the people that understand it obviously get to benefit from it. And what do you think about that?
So let me ask a follow-up then. How would you describe how Hex, how a gambler would end up using Hex?
I mean, he'd trade it, right? He would go to, he'd get leveraged. I mean, yeah, right. He'd go on that centralized exchange on FTX. He'd get 10x, 100x leveraged and go long or short.
That's not possible with Hex, because Hex isn't on those types of exchanges yet, although there's one coming soon that I won't ever promote, probably. But the idea is, yeah, you're right, they would trade, right? And so they would what would their staking behavior be?
I would say short term, right?
Probably not at all.
Not at all. Okay.
They would just hold liquid.
Yeah.
Because they don't want to give up control. They don't want to delay gratification. And so and I like to say there's a little trader inside of all of us.
Yes.
And thank God, because if we only delayed gratification, we would die. We would starve to death if we only delayed gratification.
It's a very good point.
It's really, really awesome that there's a little trader in all of us. But when we get into greedy situations, like where we see people doing so well in Hex, it's very easy, I think, to want to play catch up and to want to think like, well, maybe Hex won't do exactly what it did before, and we don't, there's no level of certainty. But what I like to prepare people for is, like, what percentage of your Hex bag do you want to allocate to if things go way better than you thought they could? Because that's what's happened so far, is that Hex has gone way, I mean, like, it's like, you could hear people say, we didn't think it was going to go to a penny. I can tell you definitively, because I sold Hex. I sold a little bit of Hex at 0.0000 whatever. Okay. So I thought that Hex wasn't ever going to I wasn't even thinking in pennies. I was thinking Hex was always going to have so many zeros that I wouldn't even know or care. Right. So, so that's something that's telling us, like, just because Hex now has a value that, like, we can remember or, like, comprehend, does not mean that that there's 0% or that you should be, like, 0% allocated to if Hex does really well. I mean, if for people in Bitcoin, if they put 10% of what they were willing to lose in Bitcoin, if they put 10% of that into, like, a best case scenario bucket, that would have treated them super well 10 years down the line.
Oh yeah.
So that's what I would like. That's what I'm thinking about right now.
And just to interrupt you, sorry, just think about how well that would treat the price. Think about how Bitcoin would be doing in comparison to now if everyone in the beginning committed 10% for 15 years.
T-shares can wait longer than you can. Like, and T-shares are always going to be more patient than the average person. Like, you know, there's the meme, like Bitcoin doesn't care about the price. Bitcoin doesn't care about like whether you understand it and stuff, but like T-shares don't care about like how short-term minded you are, saying that you're long-term minded. Like it all comes down to the proof. And like, that's who ends up with the most hex in the end. And people who don't have the most hex, who are holding hex, are the ones that are diluted. And so if you're not staking the average length, you're getting diluted. That's a mathematical proof. So if you're not staking hex for 6.5 years, then and whatever in 6.5 years, if the average is then 8 years, now you've been diluted. But the fact that adoption could be much higher in the future means that maybe your dilution doesn't hurt you at all. Maybe, but it's definitely not as well as you could have done. And so it's important, I think, for people to understand that if you're holding 100% of your bag liquid, but you would want to DCA out over 10 years, your best method is going to be to go ahead and put your stakes on the timeline.
Yeah.
To put your liquid coins on the timeline.
Yeah. I guess maybe I would want you to speak about this point. It's like our brains were not meant to handle this kind of volatility in terms of net worth. What do you think about that? It's just not really mathematically possible.
Thank God that we have a tool that gives us the superhuman ability to hold during massive price appreciation and depreciation. So the fact of whether volatility is a feature or a bug in crypto really depends on like how patient you are. But with Hex, it doesn't matter how patient you are every moment of every day. It only matters at the time when you stake.
Yeah.
That's the moment of clarity that's going to save you.
It's true, because it's just impossible to consider the feelings of thousands of X's in the future, or 95% corrections, how you're going to act on that. It's just above and beyond what you could really take into account, I guess, when making a commitment not to sell for a given period of time.
I mean, another take, I'll give the opposite view.
Okay.
Is who cares about getting an extra 2x or an extra 3x for time locking? Who cares? Like, just hold liquid and just become a millionaire that much quicker.
It's not going to happen.
It could. It's happened to people. So
that's only really rich people. That's why, like,
no.
Okay.
There are people. So there's one Hex account that somebody said was their test account, and they put in $100, and that account was worth more than $1 million. So
wow.
Now if they hadn't, so then we get into like the level of like, if you had made a stake that was like 600 days long, you would have done that. But if you held liquid the entire time, maybe your $100 only would have turned into like 300,000 or 400,000 or something like that. Well, actually, let me think about the math on that, just so I can double check myself. But it's $100 times 10,000x is exactly $1 million. So I think just liquid, if you bought on day 34, if you bought the bottom and sold the top, you would have gotten $1 million out of that. And those were real buy and sell opportunities. Those weren't like impossible wicks to catch or something. So, so that's the level of like, of what we're talking about. And it's interesting though, because if everybody changes their behavior and just only cares about short term, then it will only be the long-term guys who get the next 10,000x if that happens. Right. So it's and also you also have to remember, like, nobody who has $100 and turns it into $1 million is ever going to see the $1 million, because they're going to have sold it when it hit $1,000 or when it hit $100,000 or when it went down to $20. Like, that's Hex had too many ups and downs in between the all-time low and the all-time high in the first bull cycle of Hex. Like, in the first 2 years, it had too many ups and downs to really be able to hold liquid, in my opinion.
That's what I was saying.
Most people. Yeah. So you're right there. Yeah, you're right.
Well, I don't know. You're saying this guy did it, but I don't know. He had other stakes or maybe other wallets. Money.
I don't remember the exact details. I think it was staked. I think it was staked, so it's kind of a moot point. But just think about somebody who. So there's Brad Mills. I just found out more about this story. Brad Mills streamed with Richard Hart on Christmas Day 2019. So this was 23 days after Hex came out. And Brad Mills is a Bitcoin maximalist. He just posted on some of my tweets on Twitter, because I've always called him out. Like, one of the first videos I ever made was a little like 2-minute clip. I didn't even show my face. It was just like, I was doing clips of like Richard Hart and Brad Mills and saying, like, Brad Mills sold, he had 8 million Hex and he sold the dip. And so I've always like given him shit, even though I respect the dude a tiny little bit. And, but so I was giving him shit on Twitter, and he finally responded and was like, oh, I gave my coins away to somebody else. But at first he said I never sold, and I was like, oh, mad props, dude, blah, blah, blah. And then he wasn't really saying the whole truth, which is fine, whatever. But but the point is, like, this dude, like, even somebody who didn't believe in Hex, who literally streamed with Richard for 45 minutes on Christmas Day, 25 days in, like, he was able to buy 8 million Hex for a quarter of a Bitcoin.
Wow.
So he was buying it like 3 sats or 5 sats or something like that. So it's not like nobody could have bought. It's like, just like with Bitcoin, lots of people bought when it was super cheap, and then it was really hard to hold on to if you didn't have the right tools. And so that's why I'm still trying to decide what parameters to put on Time Pays Me.
Oh, let's talk about that. But first, we have 50 watching. So if you're enjoying, please hit the like button and subscribe. Thank you so much, Maddie, for coming on. Obviously, like and subscribe all Maddie's videos and subscribe to the channel. I'm sure you have if you're watching my channel. But I have to say that. But so yeah, talk about the Time Pays Me parameters.
Okay. Well, part of me just wants to make a V1 with only time locking.
V1 with only time locking, as opposed to, oh, you're saying no drip,
as opposed to undo a hack, as opposed to incentives and stuff. And it's just like, what's it going to be like? Time pays you, or incentives pay you? Because time is a pretty good incentive.
Time is a good incentive. What I
the people who are earning the most in investing, the people who are able to benefit the most from compound interest and all that good kind of stuff, are the people who are the most long-term thinking, the people who hold the longest. And so the original concept of Time Pays Me was to just do time locking. And then we figured out that we could do all these other cool things. But the other cool things are going to take a lot longer to perfect.
A lot longer, but I don't know. Is it worth the delay of gratification to perfect it? That's the question.
So my new thinking on this is, and I go back and forth, which is fine, but hopefully this is valuable to people.
Time Pays Me is .me.
Yeah.
All right.
Yeah. So the idea is, basically people in Hex and people who basically the more advanced users should already know what's up. The more advanced users who are actually going to stake hundreds of millions or billions of dollars of PulseX tokens, I think for those people, they're going to be able to prevent a hack by being educated. I think that that they are going to see the value of time locking already. And so, yeah, so that's something I'm considering, just because. So I'm not saying that I'm changing, like, I'm not saying that I'm changing everything. I'm just thinking out loud that, like, that's part of the process of developing something. Is like you have feature creep where you want to include more and more and more stuff that, like, people like, like, do people want Twitter to be able to do audio spaces and not crash?
Mm-hmm.
Do people want Twitter to be able to do crypto payments? Of course they do. But why isn't it there yet? Even though they have billions of dollars of resources, is because, well, actually, I don't really know the answer to that. I guess software is hard, I guess, is the answer. But also game theory is hard. So game theory is harder than just software. And that's why I like it so much. And that's why I have to go back to, like, where I started when I'm thinking about Time Pays Me, is like, of course I want to be able to undo a hack, because I'm going to be one of those guys that's, like, time locking for a super long time. But of the people who basically, like, of the people who are going to get it, they're going to get it and do it. And then if people need more of an incentive, then maybe a V2 comes along, or maybe somebody else builds something. You never know.
Yeah. I like the technology, though, especially I like the drip, but I really like the hack prevention. I guess the ability to.
Why do you like the hack prevention?
Because it's something that it's like the biggest issue with crypto is security. There is no third party, for better or for worse, but it does leave people vulnerable. I'm saying if someone ever sees the 1224 words, then they have your money. I mean, it's over. And with Hex, especially, because with Hex and in your project with Time Pays Me, right? You're locked up for 15 years. So it's like, not like, oh yeah, there was possibly a vulnerability in how you custodied your 1224 words, right? So it's like, there's nothing you can do about it. You can't send your coins to a different wallet. Like with Bitcoin and Ethereum, you could send your coins somewhere else. If, like, you feel like maybe your seed phrase was online or generated online.
That's false.
Okay, speaking.
If you get hacked, your coins are already gone. You don't have time to move them.
Yes, but if, let's say, you have concerns that maybe someone saw, maybe somebody
that's a great
saw
point.
Your seed phrase.
Yes.
Yeah. Or
if you did bad security practices, if you took a screenshot of your seed words, it is there's no better substitute for being able to move your coins.
Yeah.
But if you're staked, you can't. In Hex.
Exactly. That's why I think that's why that's my favorite part about Time Pays Me. Maddie, I'm saying you can't.
This is really helpful, and I'm not saying that my idea of preventing hacks won't happen, but I'm saying that, like, I'm saying that time locking is more important to me than stuff that sounds good, but then when you drill into the details, it's more complicated. And I'm not saying that we can't find solutions to that, but for example, like, let's say that you want to prevent a hack, and so you set up somebody else's your recovery address. Some people would argue that's not true crypto because you're relying on somebody else.
Now,
I would kind of argue that you're not relying on somebody before you get hacked. And so that's okay. But then some people would still say like, that's that that we should just be changing people's behavior up front and like making sure that they know what we know about security practices, that's the best strategy to prevent a hack is actually education, not giving people a false sense of security. Because let's say I up the max length in time pays me. Let's say I make it 100 years.
Mm-hmm.
Okay. Are you going to try are you going to be in a better situation or the best situation if you do a 50-year stake and you have somebody as your recovery address and then that's it? Like you can't change it. Then you have to trust that person for 50 years is what I'm saying.
Yeah, but you could have both of the seed phrases and just keep them in two different places. That's what I was thinking. Maybe you could.
And if people are that advanced, then maybe they just need to follow the best practices in the first place. That's the argument. Okay. That's the argument.
Okay.
Now, I'm going to keep arguing for yeah, we need this because I think that that there is a big gray area there between even people who are the biggest hack in Hex history. I did the interview, Hex 19. It's if you go to my YouTube page, the under the most popular videos, it's got a big red thumbnail, and so that was where over $100 million of Hex was stolen.
Oh, that was when the T-share payout was 60 or something per T-share.
It was very high. I remember
that. Yeah, it was crazy.
Yeah, and so I mean that's a situation where we had somebody who was extremely advanced in their ability to be secure, and somebody who basically had a very strong computer science background, but they just weren't doing the best practice. And so so that's a situation where it kind of all these things kind of go into my decision making, and then also I want to get to market.
Yeah,
I do. I don't care if I make any money. I don't care if I want time locking.
We're in it for the tech.
I want time locking on everything. I want it to be popular.
Yes, we're in it for the tech. I guess the last question to ask you about that is, you can't do a V1, V2, once you implement it, once it's on the blockchain, you can't implement. Maybe you start off with time locking, and then you could implement the drip and the hacker prevention. That can't happen after.
The best way to think about this is game theory is hard.
Yes.
And part of game theory is understanding the legal implications.
Okay.
And so making any kind of promises about something that would happen would probably be a really bad idea in a situation where you're trying to launch something, that has no expectations. Even if it's a utility, it's still interacting with people's own decision making on how they run their software that may or may not have a value to them. Mm-hmm. See how fun it is to
fair enough
speak accurately.
Yes. The most transparent community. All the trading's on the chain, and all the everything else, everything's on chain.
But the what you would expect is that if I was building something in blockchain, that I would not drop all my alpha like I am. That I wouldn't explain the process of here's what I can say, here's what I can't say, here's the process of me making decisions about game theory. Here's the process of me making decisions about how to prepare people's expectations. And yeah, so it's but if my position is, if we don't fill in the tragedy, the commons with something better than a tragedy, then we're going to be way worse off. I can't, like, I'm not going to sit around and wait for other people to volunteer to do things for free and to better the community and to like educate people, because I got the education for free and people shared with me. So I'm going to share with other people.
Fair enough. Let me just share the screen for a second, just for the add to stream. There we go. All right, this is the Twitter account for Time Pays Me.
Hey,
and, there we go. Everyone follow that. Sorry, I wasn't followed, but please follow that, and I'll drop the link in the description.
Awesome. And the absolute best tip I can give somebody who wants to be following me is to go to t.me/smartvaultme, because I post in there. It's a channel I post like once a day. And you could just find out like what I'm doing. Am I streaming? So like this stream, like I'll drop this stream in there, and that way people can stay up to date with everything I'm doing. Oh, I can't hear you anymore. Hold on. Let me refresh.
You're muted. That's what it says. You're muted.
Good?
Yeah. Okay, I can hear you now. Cool.
Oh, wait. Why isn't... Let me just fix the audio's not coming into my earphones. Sorry. Hello?
Yep.
Oh, perfect. Okay, we're good. Sorry about that. Yeah, so do you have... are you squeezed for time, or you want to go through the chat? There are a lot of people that are newer into the Hex Pulsechain PulseX, and I figured maybe it would be good if they could get the insight from the OG. But
sure, yeah, I can answer. I can stick around for a little bit longer.
All right. Okay, let's where should we start? And of course, thank you so much for coming in. So let's just get through these. Hello. And Chad, thank you, Chad Schwans, for coming in. I love the name. Hex will slowly creep up in price with the following: first announcement of V3, second release of documentary, thirdly the announcement of Pulsechain launch, fourthly actual Pulsechain launch. We have no expectations, but what are your thoughts about that?
That sounds like somebody who is really short-term thinking, which
yeah.
There's a little trader inside of all of us. So thank God this person hasn't starved to death. That's, I guess, like, I just came up with that while I was talking with you, but that's going to be like a good way to put it. So, and really the reality is, like, a lot of people who understand Hex, they might be like me and be like 98% staked or 90% staked or something. And then they have money coming out many times spread out over the next 15 years. And so the amount that you have liquid could still be very exciting to you, even if it's not all your bag. And so even if you have a small amount of Hex relative to the total amount of Hex that you've paid your future self, it could be very exciting to you if you think that the announcement of V3, that the release of the documentary, that the date of like the block height that Pulsechain will launch, and Pulsechain actually launching, if you think that will, bring a lot of interest to the space, bring a lot of attention, a lot of eyeballs, a lot of people wanting to learn and seeing, well, why is it that so many people sent money 6.5 years into the future? Like what would cause people to do that?
It's the only way to make it in crypto.
Yeah.
But yeah. All right. Could I ask you if you have any no expectations but time frame for V3 and launch? Do you have any guesses? I guess would be the way to frame
it. So based on like, all right, so I almost lost all my ETH in 2018 because I thought that Ethereum 2.0 was launching. Fast forward 4 years later and it still hasn't launched. A couple, like 3-4 months ago. Okay, so we know that software is hard. We know that things like Vitalik was saying it would be soon, it would be within a year. He kept saying that for years. For like, honestly, before ETH launched, they knew that staking and validating and all the stuff would probably be necessary because blockchains don't scale. You can't put 1 billion people on blockchain. It doesn't work. It breaks. So it was known 7 or 8 years ago that Ethereum needed this. And they took their sweet ass time until Richard Hart started talking about copying their shit. They took their sweet ass time until they had competition, and then boom, it's done, right? And
Yes.
so whatever. I mean, you can go once a month. The Ethereum developers have a public meeting. You could see all 50 of their little screens. You could listen to them talking as a group, and they suck. They're terrible. Okay. So like all of the development in this space sucks. So yeah, I mean like Pulsechain, I thought Pulsechain would have launched already. So like I'm a totally uncredible source in this situation. With that being said, I would say within the next 6 months, I would like to see Pulsechain live. And you know, from a certain perspective of like how many people support Pulsechain already, it would be really hard for a competitor to come along and do what's already been done because you had so many people wanting to be part of a sacrifice set. And that's another thing that's related but not directly tied to Pulsechain is just like what kind of people are interested in low fees are the same type of people who would sacrifice almost $2 billion for freedom of speech and freedom of movement. How much do you think that they'll sacrifice when they can buy Pulsechain and PulseX on the open market?
Yeah, I think Pulsechain and PulseX are going to do very well. Not financial advice, and we have no expectations, obviously. But okay, so there you go. Maddie says within the next 6 months, and I would agree. Okay. I don't know if we could do all of these because there's a lot of comments, but thank you. Okay, what do you think about this? If you would like
to look on testnet.
Fair enough.
Then come back and ask me a more specific question.
Fair enough. There you go. Ben Dubard, shout out to Furu. Everyone hit that like and subscribe. Yeah, everyone. Could I hit that like and subscribe?
Do it.
And then go to Maddie Allen's channel and hit that like and subscribe because he's awesome and everything. His content's amazing. Next bull market belongs to Pulsechain. So this is what I said during my stream before you came is that I believe that the next bull market I think it is going to be the bull market of Pulsechain. And I think the fact that all these people that are building on it want to put Pulse in their ticker, you know, they want to add a Pulse prefix, is a testament to the merit and to the Pulsechain brand. And I think it's a little bit like LARPy that they would want to piggyback off what Richard Hart built and they, you know, copy the brand and things like that. But I think it is the fact that they're able to raise so much money through sacrifices is a testament to how much people are eager to get in on Pulsechain. And I think that Pulsechain is, out of even the 3 Richard Hart projects and the broader crypto market, I think Pulsechain is gonna take the spotlight in the next bull market. What do you think about that? Not financial advice, obviously.
I think one of the inconsistencies that was pointed out to me which I love because I want to know if I'm right when I'm wrong, is this idea that like, what's the argument for Pulse Chain being valuable? Are you trying to have high fees? What do you think about that?
That's a big question. What's the argument for Pulse Chain being valuable?
So basically the reason why transactions are so expensive on Ethereum, the reason why some people wanted Pulse Chain to be created was to save us from the high fees.
Oh, you're saying so many people are going to use it that the fees.
The reason that the fees are so high is because the price of Ethereum went up thousands of X. So which one do you want? Do you want Pulse Chain to do really well, or do you want cheap fees?
I want both. I would say personally, I want Pulse Chain to do really well. But
okay, then you're not in it for the low fees, and that's okay.
Fair.
But the point of Pulse Chain originally was to solve the low fee problem or the high fee problem.
Okay. I mean, yeah, but it does. It's nothing to do with the fact that there's also a lot less users. Doesn't the users make the fees high as well? Meaning when there's a lot of people using the chain, and people like to get into the block, you have to pay a lot higher of a fee.
This is like this is one of the really fun things about blockchain is like it doesn't matter what I say, you can still be right. So like people in Bitcoin, they wanted it to be like what are all the like the narratives that have been over time?
Oh,
it's like the story always changes. Like, what's the point of Bitcoin? It's like to prove it works? Question mark. And then like, what's the point of Bitcoin? It's like peer-to-peer cash. It's like, what's the then it doesn't work for that. And then it's like, what's the point of Bitcoin? And it's like censorship resistance, digital gold, like decorrelated asset, store value, like blah blah blah. People are just making stuff up. Like, don't you think that the creator of Bitcoin would have told you what it was for and then that was it? No, Bitcoin is it's like a technology. It's a leap forward in technology, and technology, when humans use technology and it's useful, they try to make it more useful. And it turns out that things becoming incredibly valuable is very useful to people. But I think also we need to remember that like that's not the most useful thing in the world to everybody. Is a few people getting rich. And but at the end of the day, I mean, like, you could also make the argument like, well, people need to get rich to like be able to do the right thing anyway these days, and like to get their speech out there and all that. And so I wouldn't be surprised if I was completely wrong, and if Pulse Chain like does become incredibly valuable, like it, like let's talk actual numbers. Like if Pulse Chain did a 100x, would the fees still be cheap? I think so. Mm-hmm. So you might be able to get both. How cool would that be?
That would be really cool. Yeah.
Or you could get a fork of Pulse Chain if the fees become a little bit high, and then you could get an extra copy of your coins, or like there could be a new period of no expectations, sacrificing for the freedom of horizontal scaling. Something.
Fair enough. I guess we will see what I guess what I'd say quickly about what you said was that the Bitcoin narrative always changed, and that's what I like about Hex so much, is that it actually incentivizes the one thing that matters, which is buying and holding. That's what's really awesome. But yeah.
Oh yeah.
All right. Thank you, Ted Cash, and thank you for tuning in. Okay. Hexray Vision, thanks for tuning in as well. Thank you, Hexray Vision. We love Hexray Vision. Go follow him on Twitter at Hexray Vision.
Yeah.
The moon Carl is right less often than a broken clock. Let me just pull up. Should I pull up what I was covering about the moon Carl? Okay.
I mean, I didn't. Yeah, I wasn't really up to speak because that's when I joined right when you were starting to talk about that.
All right, let me show
But
you this.
did you already cover it?
It's okay. We cover it again. So basically, yeah, this guy said it's a shame that Bybit is hosting another Moon Carl token launch after the performance of the last one, which he appears to have mostly abandoned. So you heard about Costa? Do you remember Costa? Well,
No.
Okay. Well, this was Costa.
Never heard of it.
I had a couple
It
of
didn't do
startups,
so well, huh?
and then wah.
Yeah.
So I actually bought it in the beginning, and then I
Oh, okay.
sold it after it dropped 50%, and I realized that but basically what happened was they went to VCs, and the VCs got it for like 8 cents, and then they went public at $1, and then that's what happened. I mean, wouldn't be the first time. So then Carl the Moon just tweeted and then he says so he says every year, so 2013 Bitcoin, 2014 Doge, whatever, and then 2022 Medieval Empires, which is Bybit's token.
Yeah.
What do you think about that?
I think we should steal his first like 10 lines and then put Hex in there.
Yeah. He'd be but no one's paying him for that, right? I mean, that's the thing about
No, I mean, like we should tweet that from our accounts, like except just replace like the last thing he's coming up with.
That's a meme right there. All right. Hey Maddie, hit those likes. Good advice. So true. Ooh. This was from Maddie Allen, Hex Therapy Live. Who's that?
Who's that guy?
I would hit that channel and like and subscribe to that. Very good information. If I have liquid Hex and it went up a lot and then down a lot, and now I have more USDC, I like staking some of my liquid Hex, staking the dip. I agree with that. It's awesome is that like you kind of buy the dip every day in some sort of sense.
But also your T-shares lose a day of their life. And when they need to get reborn and rebought, the price is way higher than it was when they went in. And so your T-shares actually do die a little bit every day that you can never get back.
Yeah.
And that's a concept that I discovered and called T-share years is the amount of T-shares that you have times the amount of years. And so every day you have one less day in the life of your T-share years, unless you restake your Hex. And for some people at some point, then they would need to add to it, or they would just be able to maintain the same percentage of their share of the future compound interest. Because T-shares are deflationary, you can have less T-shares every day and still have the same share of the future compound interest if you're staked the average length or longer. And so that's all important stuff that often takes people a long time to get their heads around. But like once you reach the bottom of the rabbit hole and then you like do a few like laps to the top and the bottom of the rabbit hole, then these are the things you discover.
Yeah, it's very interesting. I'd say is that when I first staked, right, it is a little bit of a leap of faith, so to speak, because like it's very hard to part with your money for 15 years.
Correct.
And then once you do it, you're sort of incentivized to learn more, and like you just go down the rabbit hole. It's really an interesting thing. Yeah. Okay. How about this? And thank you so much for taking the time. I hope if you need to leave, then just let me know. Let me actually link Maddie's channel in the description. Please
I'm going to grab some water. I'll be right back.
All right. Maddie. There we go. Please subscribe to Maddie Allen's channel. What I like a lot about Maddie's channel is it's more than just cryptocurrency. It's mental health, and I think mental health is the most important thing. If you don't have your mental health, you have nothing. You have nothing. I think it's more important than physical health, actually. Okay, here we go. In your opinion, where do you see Hex pumping to once V3 is released and the weeks, months leading up to the Pulsechain launch?
I don't know how I know that, sir.
Yeah, that's the thing. Like, people always want like price, like where,
like, you're so used to hearing people like lie to you that they think they know. Like, just if I say I don't know, like, that's fine. That's me telling you the truth.
Yeah.
Everybody who gives you an answer is lying.
Yeah. It's like the price of a crypto or any asset is dependent on so many things to happen in so many ways. Like, to know what it's going to be, it's really difficult.
But to be fair, I asked an artificial intelligence the same question a bunch of different ways. And yeah, it's, you know, it's like, it still gives like the same answer of like, not really like, you know, the price of any asset is based on many factors, you know, and it's like, that's so true. It is based on many factors.
Yeah. It's future price performance. So it's funny, like, so technical analysts, they like to look at charts. It's like, oh, what do you think about, I see these like live streams. It's like, what do you think about, you know, DOT? And then they pull up the chart, and then they all of a sudden, from seeing past price performance, they're going to tell you exactly where it's going to go. It's like, it's the stupidest thing ever. But yeah, so true. Maddie is the GOAT. We appreciate you, sir. I agree. Okay. Joined the stream and just learned of Hex and Pulsechain. Still trying to understand the usefulness of the coin versus other coins. Is Hex just for gaining interest, or can I buy things with it? Well, lucky for you, we have a Hex OG to.
Yeah, I mean, we like, luckily we actually answered that question like right after it was asked. So the person who asked it probably already got like the in-depth answer. Hex is for whatever people choose to use it for. It's software code. And so is it for gaining interest, or can you buy things with it? You know, like, a lot of people, if they're trying to buy something and they've saved their money using Hex, what they would do is they would use a decentralized exchange to swap their Hex for Ethereum or for USDC coin. And then they would use that to convert to their bank account and to be able to purchase something with chargeback protections that are offered by like a credit card that you pay off every month. And so that's like Hex is not designed as a method of payment per se, as a medium of exchange, but it is designed as a store of value. And so, yeah.
Okay. Thanks, Francisco. You're cool too. You can with HSIs. This was actually talking about moving. Moving. So the thing about HSIs is, I don't know. I think it kind of strays from the ethos of Hex of, you know, promising not to sell, because like it's always liquid. So I mean,
yeah, you can hack yourself when the price goes up, and then you don't get any of your mad gains that you would have gotten from waiting. So
yeah,
that's not a solution to the problem of weak hands that can be stolen from by yourself or by other people.
Yeah, that's what I really think about the HSIs, and then you have the derivatives like Maxi. So I mean, I think there is maybe market for it, like if you're a whale and you don't have to really worry about delaying gratification because you're already rich and like it's trading at a discount. I mean, that might be a play, but if you're trying to Yeah, I don't think it's good like to hold them if you need a delay gratification. Thanks. Okay. Forbes articles rife with issues. Currently, I'm writing a better one for them.
Okay, and we were talking about a Bloomberg special episode, but there must be a Forbes article out there too.
Okay. No, not this time. Okay. Hex Turtle asks, what's the best benefit of Hex? We have an awesome community that is working around the clock to do what they see best to fix what is wrong with the ecosystem, bad articles, front ends, etc. Continue. So for anyone who doesn't know the true value of Hex, it's the community and the knowledge that we do not expect others to do things for us. We take it in our own hands.
Spoken like a true future streamer.
There we go.
Hex Turtle. First. We're calling for you to become a Hex streamer.
You heard it here first. Hex Turtle.
Uncle Maddie needs you. Ask not what Hex can do for you, but what you can do for Hex.
Exactly. All right. And then, thanks for clarifying. Thank you. All right. So I guess that's it for the chats. We got 41 watching. Please, again, hit the like, hit the subscribe, hit the subscribe on Maddie's channel. Follow Maddie on Twitter at Maddie All In. That's ALLIN. It's one T. It's MATIALLIN. And follow me at Furu Finance. Is there anything you'd want to say to wrap it up, Maddie? And thank you so much, by the way, for obviously taking the time.
My pleasure. Well, shout out to you for the work you're doing. I can tell you're really interested in understanding Hex, and getting the word out about it. And so, hats off to you, and keep up the good work.
Thank you. I appreciate that. And thank you for the work you're doing, which we have no expectations from. But right. we do enjoy Hex Therapy, and we do enjoy Game Theory Gang twice a week.
Right on.
So it's Tuesdays, Thursdays, right?
That's right.
Tuesdays, Thursdays. It's been going for how long? How much uptime do we have?
106 weeks is this week that we're starting.
Wow. That's incredible. All right. Thank you guys so much. And until next time, tomorrow at 12 p.m. Eastern time, I'll be streaming. So tune in for that and like and subscribe. Awesome. And have a great day.
Peace out.
Peace out.